Welcome to Trustly's Masterclass on Pay by Bank, otherwise known as Open Banking Payments. You're in really good hands. You're actually dealing with the people who invented Pay by Bank. I'm Gonthier. I'm the founder and CEO of Trustly in the San Francisco Bay Area. Pay by Bank is kind of a catch-all term for any payment method that essentially goes from one bank account to another bank account, where the transfer of funds happens from one bank account to another. It covers paper checks, wire transfers, Zelle. It covers FedNow. It covers the clearinghouse RTP network. It will cover same-day ACH and ACH. For me, Pay by Bank is a term that is too general, too generic, essentially. What we really mean is open banking based or enabled payments over bank rails. We are indeed going to move the funds from a bank account, the consumer's bank account, to another bank account, the destination, the merchant's bank account, whereby the consumer signs into their online banking from the merchant's or biller's website or app, and with that just accepts or authorizes a debit from their chosen bank account when they sign into online banking in a little portal, a little secure light box that we expose on top of the website that they're on. With that, they can identify the bank account, the actual checking savings bank account that they want to use for that payment, and the funds can be debited from their bank account and transferred over whatever bank rail is adequate to the destination, to the merchant's bank account. My first payments company, which I started in San Francisco in '97, imagine that, it was not clear that cards were going to win online. We were after an alternative approach. We had Wells Fargo as a big equity investor, some premier VCs, and realized that, well, cards had a shot, but alternatives could as well have a shot. We devised another approach, which was to go straight after the bank account. And so in 2001, we went live with the first ever open banking payments platform. At the same time, the internet bubble burst. So after the internet bubble burst, B2B meant back to banking. And so startups lost a lot of employees, some going back to banks, others going back to consulting firms. B2C back to consulting and B2B back to banking. Open banking payments in their very first incarnation had a short-lived existence, but I ended up continuing my life, of course, in fintech. And in 2007-8, I kept hearing about this payment method in the Netherlands that was 40%, 50%, 60% share of checkout. And at some point I started looking, and it was just this open banking payments platform or solution that I devised in 2001, and I thought to myself, this is it, the time has come. Trustly in Sweden started in 2008, and they joined forces to be part of the writing of the regulatory framework for open banking payments. So that's really what happened in Europe back then. So started in the US, leveraging access to Hong Kong as a test bed for the solution, developed in Europe through the Netherlands, then Germany, Sweden, and all of a sudden the whole continent ended up with regulation. And in 2012, we went to market with the first open banking payment Pay by Bank solution in the US called Pay with My Bank. That was the original name of Trustly Inc. I think it's quite fascinating when we've gone through from inception to today, 500-person strong company that's profitable and growing. The reason I was still laser focused for the past 20 years on this concept is because I've always had this dual goal of, one, bringing to consumers a simpler way of paying, simpler user experience and financial inclusion. I realized when cards ultimately really won in e-commerce with PayPal, but still leveraging cards for 50% of their volume, I realized that everyone was paying too much. That why is it that a merchant in the US has to pay 3% when in Europe they pay an order of magnitude less? For consumers and for merchants, there was a strong reason to start working on a new way of paying. So our fundamental focus and our definition includes the notion of open banking access to make the user experience simpler. Simpler because no one knows their bank account and routing numbers. So you have the UX advantage, very clear, it becomes simple. And when you establish a secure connection with your bank as a consumer, there is strong authentication of who I am by the bank. That strong authentication limits fraud by definition. Is the single biggest defense against fraud is strong authentication, identity verification. Then we can also verify the bank account. Is this a bank account that looks legit with normal life type of activity? Is it a bank account that's funded? We look at a number of attributes. So it gives us the ability to provide a user experience that's much better for the consumer and do advanced risk management, therefore much better consumer protection because of very strong identity and account verification. That's how we define Pay by Bank. That's what we are bringing to market.